go. The opinions and views expressed in this podcast are solely those of the Mortgage Dudes only, and not those of Equity Resources Incorporated or Greentree Mortgage Services. We're not crazy. Think of them as your slightly odd, yet occasionally hilarious uncles that are very knowledgeable about mortgages. I will say, together they have over 45 years of experience in the housing market, and that may or may not have included bourbon, beer, and cigars. They are here to enlighten and entertain, and we cannot be responsible for the language or jokes. So buckle up and be ready. Things are about to get interesting.
If something doesn't smell right, it's probably not right. So if you're working with a big national company, go talk to a local one.
If something smells like fish, it's probably Ed. So,
yo, baby, get back fishing.
Spoiled fish. Hey, everybody. Shane Marzullo with Greentree Mortgage and the Mortgage Dudes, and my partner,
Ed Moloney. Equity Resources. Cape Cod, beautifully bald, cleanly shaven, so I can match my counterpart.
That's right. But you didn't really match. You still got like what you have there is if I decided not to shave the whole weekend. So but you gotta go smooth.
We have a public service announcement. Yeah. You must put sunblock on your head, on your face, on your nose. Because here, I got a little son with skin cancer. We got to remove. That's why I've been a little bit delayed on the podcast. Yeah. Everything's good. We're in the middle of December. I'm probably going to try to trout fish today, first time in a while. I'm getting a little angry with no fishing. So January, February's podcast could have a little anger from Ed. Idiot. Shane will be in Florida playing with the cigars, and his wife saying, "I want to get back to the babies, because they have grandchildren." Yeah. But Shane will want to go. I'm going to stay in Florida. Well, I'm freezing my. You know what's up. Okay, let's get to
it's funny when people see that, Ed, it looks like I just want to tell people, no, Ed is not putting gauges in his nose,
Okay, so Shane, the world is talking about two things. I'm hearing affordability, and then rates. The Fed rate, mortgage rates. The other thing really sucks. Is insurance in general. Insurance in general. Health insurance sucks. We're not here to talk about health insurance. No. But homeowners insurance and how much it's increased. So people, listen up. Because you're going to know people that are renting that say they can't afford. Rent is 100% interest, and rents are going up. So we're going to talk about affordability, the news, and crap. I'm going to let you start it, baby.
Yeah. Today's letter by Sesame Street is sponsored by A for affordability. So obviously, we get Ed and I always mumble and grumble at this, when the Fed meets and they talk, and if they lower the rate.
And they're meeting today.
Yeah. And we get all these people like, "Hey, I heard the rate lowered a half or a quarter." I'm like, no, that's the federal fund rate. That's your short-term loans, your car loans, interest rate, your credit card rates, your HELOC rates, all the small stuff. Ours is based off the mortgage-backed security, which is a different traded stock, but it is affected by the Fed rate. And I tell people, think of it as like this.
But it's more affected by the words that the Fed says than the actual Fed rate going up or down.
Correct.
Because that's baked in. So mortgage-backed securities are bond grouping like
it's just a stock. It's a stock,
It's very similar. They're bought up and down, and they're bought on profitability. They're bought on what they see for the future.
If you have it's like Elon Musk saying something that pisses a bunch of people off, or it makes people excited, like, "Hey, I'm dropping my electric cars by half." All of a sudden, their stocks are going to go, could go up or down. Talk makes stuff happen to the rates. That's basically what it is. Talk, farm reports, job reports, all these reports that come out, and honestly, professionals like Ed and I listen to that and have a guidance on, like, okay, hey, we're not just seeing what's right in front of our eyes. We're looking way ahead. What is going to happen? Again, we're not, we don't have a little crystal ball, so we can't tell you exactly. We can only suggest, no better than what the mortgage bankers people do, or whoever else is out there giving their opinion. Honestly, we're the only two guys with the boots on the ground that actually can give probably a better opinion than the higher ups that just sit there in their little ivory tower and say, I think this will do this.
And everybody's rate is different. Your credit score, your loan to value plays into it. So CBS News earlier this month said we were at the lowest we've been at, 6.19. The news has said at times this year we were over 7%. So we're in the lowest quadrant we've been in 2 years. We're not allowed to say certain rates because of APR and certain things. Yes, compliance police. We're not doing that. But the bottom line is rates overall nationally are in the lower quadrant. Is that going to help housing? Really depends. Because in certain places it's in inventory. We've got federal employees being laid off. We've got companies having 15% of layoffs. Is it a good time to buy? If you are financially ready and have a plan, it's always a good time to buy. Why? Back to what I said, renting's 100% interest. If you're Shane's kid and you're living in Shane's house and paying zero rent, well, then why the frick would you rush out to buy? You wouldn't. But if you're paying in my market $3,000 or in his market $1,800, and you can get a house for a payment of $3,500 or $2,300, and you can afford it or afford to rent out a room to a friend, then you should. So affordability, I'm sick of hearing all this. It's better than renting if you're ready. But this does tie into people that did buy at certain points, and their rate may be 7 or higher, and they hear rates in the low 6s. It might make sense to refinance in my market if you've got an $800,000 loan. But in another market, if you've got 150, your closing costs are usually pretty similar. I'm going to let Shane take it from here. Come on fire, baby.
You are. Look at you. You get a clean cut, shave, and a haircut, and look at you. You're like a new man. Yeah. Today is the sponsor by the color of mauve or port red. Anyway,
if anyone wants a Farmer Ed sticker, look how pretty this is.
Message Ed or message us, and Ed will send you his Farmer Ed sticker. So
or a shirt,
a T-shirt
from Mortgage Dudes. Okay, take it.
Anyway, let's talk. Let's talk about affordability. So, because again, media is the one thing it kills everybody. It's like, I'll have clients like, I heard, CNN said the rates are this. I go, well, have CNN lock your rate, because that's not the case. So when they say, hey, the national average is 6.19. Well, they're looking at the big markets like, New York, the Sand States, California, all that. And then they don't factor in how much points a person has taken, how much equity you have. So there's so many factors. It's not a one size fits all.
It's an average of locked rates during a period of time that you just said. They could be ARMs, they could be points, they could be bad credit, they could be 800 credit score with a $100,000 loan on $1 million home. So back to when people call me or you, when they say, what's your rate? I say, actually, what's your rate? And then I explain to them
the rate's
exactly
zero.
what you said.
The rate's zero because you're not in contract on a home, and I have no idea. So, but anyway, back to the low thing. So, Ed makes a great point of like, hey, if you have an $800,000 home, I mean, Christ, you save 0.5% or 0.75%. That's a big savings on the grand scheme of everything. But if you're in 150, maybe even a $200,000 loan, sometimes 1% is not enough to justify closing costs. And Ed does the same thing, is we like to think of it as VA has a rule of like when you're doing what they call a streamlined refinance, where you have to recoup the money that you cost you to refinance within 36 months. If you do that, then you're able to do a loan through VA on a streamlined refi. I feel it's the same way. It should be the same way in reality. If you can recoup your cost within 3 years of refinancing, then it's a good reason. So I've had people who are like, look, you have an $80,000 loan. You literally has to drop like 2%. Pay extra. Don't even worry about it.
All times for a refinance, not just for rate drop, but maybe they put a ton of money down, or maybe they did it 5 years ago, and Sally's getting laid off, and she's worried. Johnny's only got so much income. Their credit cards, you talk about usury. You talk about our government should be involved in something. Credit cards, I'm seeing rates on store cards, I don't want to get sued, at 32%. 32%. It's insane. So back, if you're renting, it makes sense to always look at buying. But if you own, refinancing, just hearing the rates, pick up the phone and go to an expert and really think about what your goal is. The other thing is, if you're going to be in your house for 2 years, I have people come to me all the time from the ship,
don't do it.
The one that goes in the air, the rocket ship. And people call me and say, well, they sent me this. I'm like, do you see you're paying 3 points?
Yeah.
How long have you been in the house? Oh, 12 months. Don't do anything. I can make money by telling you to refi. Don't do it.
It pissed me off because it said he didn't disclose any of the right thing. Our compliance department would have been all over his butt. But the fact of the matter is, he did show the APR. There's something real simple. If you go and Google, mortgage APR calculator, and you put in stuff, and you all of a sudden you see like, oh, he was basically, to get what he had to do, it was basically 3 points plus about $1,500 in lending fees. Are you kidding me? Yeah. So he's just basically, it's he's a ex-used car guy. So he's just selling crap to people.
I think the summary on this is buyers beware, number one.
Yeah.
Don't believe all the stuff in the news. If you work with a mortgage person like us, we're going to be in front of you for the life till you are mortgage debt-free. If you have a mortgage person now and they're not clear, reach out to us. If we're not in our 6 states that we're licensed in, we will refer you to somebody excellent in them. And yes, the news is up and down.
Yeah, I think I get a lot of clients that was like, hey, I'll text people. I'm like, hey, just heads up. Rates are here right now. You'll save this much. It's up to you if you want to talk more about it. And some are like, you know what? Like I got a text last night from a client. It was like 11 o'clock. He's like, hey, sorry for the late text. And I'm like, no big deal. He goes, I think I'm going to wait a little bit. I'm like, fine. That's fine. I'm not paying your house payment. You got to be comfortable with it. He goes, I think I want to wait for about 5 or 6 months. Great. Perfect. And
everybody's financial situation is different. Their life situation. You don't know if they're about to get divorced.
Yep.
We do not push. We want to give data. We want to give education. Let me tell you what the dumb question is. The dumb question is you're too scared to ask.
Yeah.
That's the only dumb question. I have clients say to me all the time, well, I didn't want to bother you. I thought it was a dumb question. No. There is no dumb question. If something doesn't smell right, it's probably not right. So if you're working with a big national company, go talk to a local one.
If something smells like fish, it's probably Ed. So,
yo, baby, get back fishing.
Spoiled fish.
I think before we get into home insurance, which is just a cool thing, how many times did you golf this year? And was it what you hoped or not?
I golfed a lot more than I think I golfed a lot more this year than I did last year for sure. I don't even know how many rounds. Janelle and I generally would golf on Fridays, and which was always fun. And then we'd golf on the weekend once. I would say more than half of the summer weekends we golfed, which is fine.
Did you pick up golf when your kids were young, or is it something after they were older?
I've golfed since I was a young kid, but then,
body like that doesn't look like a golfer's.
What's that?
Your body doesn't look like a golfer's.
No, exactly. So, I golfed when I was a young kid. About 7th, 8th grade, I got into wrestling. So I wrestled, and really ever golfed again.
In high school, baby.
Wrestled in high school, wrestled a little bit in college. was going, then they said, okay, I moved down to Ohio here. I went to school up in Michigan for a bit. Moved down here, and my buddy was like, hey, let's go golfing. I'm like, okay. I got my old ass set of golf clubs, and it kind of got me into that again. And I started just kind of getting the bug and progressively golf more, which is fun. I love it. Like, actually, I just got a new set of irons. Tomorrow, me and a buddy of mine, we're going to go back to the guy this guy's awesome. He's a club fitter. And I'm picking up my new hybrids, and then my buddy Jeff is going to try new clubs. Jeff's like 6'7". He's a realtor friend of mine. He looks like Lurch. And he's going to be swinging the club. But we also have I have a golf simulator set up in their pole barn area, and so we call it it's iLink Realty. We call it iLink Realty Country Club. So
nice.
Yeah, we're very petite.
When they need a real mortgage person that can golf, we'll send Brian up there.
Yeah, exactly. When they need a real mortgage person, they'll just call somebody else. So
they'll call Brian Gilligan.
Yeah, there you go.
Brian is my associate. Brian does all the work. My wife and daughter say I am the mascot.
It adds a pretty face.
But Brian's a great golfer. Maybe next year you fly your ass out to Cape Cod. You and Brian can golf. I can laugh.
That would be. I'll just take the RV. I'll just pull the RV. Don't mind me. I'll be cleaning out my in the backyard.
Here's what I need. You and a bunch of horses' asses. So for me, I do measure. I went from 35 times on my boat in 24 to 47 in 25.
That's actually impressive.
Gold. Frick, I don't work.
Well, here's the thing. Was the weather better?
Yeah, the year before, wicked wind.
Yeah.
Wind sucked. Let's get into the
insurance.
Insurance.
Everybody hates it. One of my closest friends is my insurance agent, and I refer a lot of my clients to him. And I literally tell him every time, I'm like, I hate you. I literally hate you. So it's because and it's not his fault. It's just insurance, and Matt's great. He literally called me. I think we were in Florida a couple of years back. It's like, hey, I'm switching your insurance. I'm like, okay. He goes, well, Nationwide is going to increase it to this much. And I'm like, oh yeah, I'm not paying that. And he's like, I got another company just as good. They're going to be basically they're going to be, the same what you're rate at now. I'm like, okay, fine. But yeah, if you've owned a home, you saw the pinch of like, we get the calls. Hey, my escrows went up. Why did my payment go up? Well, let's look at this. Well, your taxes only went up a little bit. How much did your insurance go? Well, originally it was $700 a year. Now they want $1,900 a year.
Right.
And that's something, I blame all the edge states, the Floridas, the Californias. We don't screw everything up. It's the hurricanes and the forest fires that burn, that screw up everything for all of us.
And that is the biggest issue. And yes, you should talk to your insurance provider. Be careful to make sure your coverage is enough. I've seen people reduce coverages for costs. The fact of the matter is it's gone up, but this brings up a great subject back to affordability. We get the calls all the time. I have a guy right now refinancing. Only wanted to refinance if he saved X dollars. We just pulled his taxes. His taxes went up $300 a month. Mm-hmm. Why? He had done a shitload of work to his house over a 3-year period. The value went up $400,000. So now his refi that he's going to save $300 to $400, it's just offsetting his taxes and insurance increase. He's still going to do it, but we had to educate him. And the reality is, whenever somebody buys a house, I always say, yeah, your rate's locked and fixed. Mm-hmm. As long as you pay your mortgage on time, but expect your taxes and insurance to go up. And these things don't come down. And the cost of wood, even though it went up and came down, the insurance companies still say it's up. Labor, cheapers, creepers. I mean, especially in my area.
And to find somebody that actually was worth it is hard.
So to kind of summarize where we are, we're all about, you hear in the news, listen to the real straight facts. Yep. Pick up the phone and call people. Affordability is a big thing. After the Fed speaks today, if you have questions, Shane will put our phone number below. Call us. Call us now. Call us next June.
Handle it.
Call us whenever, and we're there. Shane may come to Massachusetts. We might put a lobster right up against his nose.
I would love to have lobster. I love it. I like it. I'm just not going to pay for we have stupid prices here because we're not right next to it.
Lobster's just stupid anyhow.
I know.
You're going to be here. We'll let you pick up horse shit. I'll feed you lobster.
Yeah, there you go.
Okay, quick little fact. Did you know when the Pilgrims, way back when, lobster was fed to the prisoners?
Yeah.
Oh, you're pretty grateful.
I actually did hear that.
Stupid
they had high-end food. Now, they had high-end food.
So my parting shot is, this year has been volatile. The markets don't like volatility. We're going to continue to have volatility, and get ready.
Yep.
The best decision long-term is home ownership. There are ways to get through affordability. Buy a multi. Get a relative to co-sign and rent out rooms. This is not about this topic today, but we talked about affordability, the things we don't control. Rates, we don't control. Insurance, but we can control our options by education and knowledge. Yep. If you just want to do a call with us, even if you're in a different market, we will talk to you. We can't talk about rates because I've had people come slap me if I talk about rates in California. But we're here to serve.
I have no clue. I have no clue what the rates are there. Yeah.
But you can still get an education from us. Yep. So my parting shot is, Shane, I wish you a Merry Christmas.
Oh, thank you.
I hope that Santa brings you a bag full of effing coal because you deserve it. I
hope he brings me a bunch of cigars. That's all I want.
I hope Janelle gets some earbuds so she doesn't have to hear you. And your parting shot, my beautiful bald.
My parting shot is real simple. I think education is the best thing for people. I don't want you to chat GPT it. I don't want you to go online.
People yelling in the background.
I really, truly want people to just reach out to me. We don't need to pull an application and run your credit, just to have a conversation. And many times I've talked to people and said, well, let's look at this or let's look at that. And after we've talked, like, okay, yeah, let's not worry about it right now. You need to do that. It's knowing numbers. We can give you ideas without, having to go through all the rigmarole. And honestly, I don't want to spend the money on pulling a credit report if we could save that time and it's just easier for you. So
call us. Shane, Merry Christmas, my beautiful
You too, buddy. Take care of that nose. I want to see one of those big gauges here.
I was thinking about just putting a gold piece in.
There you go, a little gold gem.
Baby.
All right, and we will talk to you guys later. Subscribe, it's free. The button, push it. You get it, and then guess what? When we post our videos, boom, you get an alert. You don't just sit there and wait for us. You don't have to wait. Just do it for free. It's fun. I'll talk to you guys later.